Good afternoon. Hello, hello. Just want to check if you can hear me okay. See me all right. Let me know. Put it into the chat. Hey, Ferda, how are you doing? I'll give it a moment before we get started. And if you can see me okay, can hear me all right, let me know. Hey, Ferda, thank you. I guess you can hear me okay. Today we're here with Vantage on live trading session. So I will be sharing with you some thoughts, ideas, what I think is likely to happen in the market. So if you have any questions, any trading related questions, please feel free to let me know. If you have any trades that you entered recently or would like to see any trades that you currently have running, I'll be happy to help you with that as well. Dollar index, Germany 30, US 100 for sure. I'll get to that shortly. I'll give it a couple of minutes as we let everyone else stream in before we get going. Have you been trading well? We've seen a lot of updates. We've seen a lot of moves in the markets over the last week. So I hope you've been trading well, safely. Alrighty. A minute more and we'll get started. Yeah. Let me know where you're joining me from as well. I'd love to find out. Good stuff. Okay, so let's get started. Today we are here with Vantage on live trading session. My name is Jin Dao. Most of you know me as Jin. So I will be sharing with you as this live trading session some updates about the market, what has happened recently, what is likely to happen, and what news we have coming up. I will be sharing with you some possible trade ideas, some possible setups, and then if you have any questions, I've seen some come through already. Let me know. Put it into the chat and let me know. All right. So as usual, before we start any session, any webinars, the information, contacts, or opinions which are expressed in the presentation and on the following slides are solely those of the presenter and not necessarily those of Vantage, and are solely used for educational purposes, as they do not constitute investment advice and or consultation on how a client should trade. Vantage does not guarantee the accuracy or reliability of the information provided herein. All right. So what it really means is that as you look as we go through the session, if you do jump into any trades, if you do jump into try to follow any analysis, please make sure that you do your own due diligence. Check your analysis, make sure it fits to your trading style, your risk profile, the way you like to trade, right? And also make sure that you check before you jump into any trades, your margin, your leverage, because you don't want to be, we might come to the situation where we're looking at several possible trade ideas. You don't want to be jumping into all the trades. You end up over trading, right? Over leveraging, over trading. Might be a good thing if you get it all right, but could be terrible and really painful if you do get them wrong, if we do get them wrong. All right. So as I was introducing, my name is Jindal. I'm one of the prop traders here. So, please, I've been trading for the last 10, 15 years. If you do have any questions about your trading journey, please let me know. I'll be happy to help you through with that. Okay. So with that said, let's jump straight into it. Okay. So how I trade, what's a prop? What's prop means we trade our own company funds. So I'll trade on behalf of the company funds here. Okay. So just to give you a bit of an overview of how I trade, I do it a little bit differently. I look into the news first, right? So I always look into Forex Factory. I get the news, the fundamentals. Then based on the fundamentals, I develop a bias, right? Based on the fundamentals, I develop a bias, whether the euro dollar should go further up or the pound dollar should turn back down. And then I look into the charts to identify, the key levels where price could react to. Okay, so for example, if I'm looking at the euro dollar and I think that, it should be heading towards upside, then I look into the charts. I'll be looking for it to bounce off a support level or break through a resistance level to continue on with the trend, to trade towards the upside. Okay, so I do a combination of both the fundamentals and also technical analysis. So with that, then I get my trade ideas or possible trade setups using those combinations. Okay, so let's go into it. I'll do a quick review of what happened last week. Right, we had a big week last week. We saw a lot of volatility, especially on the dollar index. Why so is because you can see nothing much happened on Monday last week, as today as well, nothing much happened. But what we actually saw was on Tuesday, we had the congressional elections in the US. That didn't actually move prices too much. The big price mover, the huge price mover was on Thursday, 10th of November in the evening at 9:30 p.m. GMT +8. Okay, what happened there was the US CPI data. CPI data is the inflation data, inflationary data. Year on year, it was an 8.2%. It was expected to be a 7.9. It came out at a 7.7. Okay, despite this being a red number, it's relatively good news, right? It's relatively good news because it shows that inflation in the US, inflation growth in the US is slowing down, right? Inflation growth in the US is slowing down from an 8.2% to a 7.7. Good news. Why so is because that means that the recent, well, not recent, but the previous interest rate increases from the Federal Reserve aggressive interest rate increases from the Federal Reserve has been taking effect, right? The US Federal Reserve has increased interest rates quite significantly, and inflation was very high and staying very high. So you can see in September, it was an 8.5, expected to slow down to 8.1, continue 8.3, was 8.3, expected to slow down again to an 8.1. It still stayed roughly about there, 8.2. So inflation was still high up until this month, or this month counting. It dropped a lot more than expected, from 8.2 to 8.2 to a 7.7. So what this means is, or what this really means is that markets started anticipating that the Federal Reserve would likely slow down on future rate increases. Right? There always had been that question of whether the Federal Reserve would slow down on future rate increases, with the CPI data or the inflationary growth data now showing 8.2 to a 7.7. It shows that the likelihood of an interest rate slowdown is increasing. And because of that, we saw, I'll show you here on the dollar index, right? Let's look at the charts. On the H1 time frame, clear out some of those lines. On Thursday, we can see that on the release of that news, we actually saw that weakening of the dollar index from that 110.80 level within the hour straight down towards about 108.70. Okay, big or strong weakening of the dollar because now markets are expecting the Federal Reserve to slow down on their future rate increases. Okay, so despite the reaction, is actually a relatively good news because we're not going to see inflation run, we're not going to see interest rates run super high while inflation continues growing. Okay, so that was a good thing, a drop in the CPI data, but a relatively good news there. And then what compounded the move towards the downside for the dollar index was on Friday. Right, on Friday, 11th of November, we actually had the pound GDP number. I'll show you that shortly. But also later into the trading session on 11 p.m. GMT +8, we had the US preliminary University of Michigan consumer sentiment. Right, consumer sentiment shows you the behavior, the confidence of consumers in the US, and it actually dropped very significantly from a 59.9, expected just to tick a little bit lower to 59.5, but it actually dropped very significantly to that 54.7. Okay, so we're actually seeing now consumers losing confidence, right? Having a more dovish sentiment. You can see if we go into the details, it shows you the leading indicator of a consumer spending, right? And we know that GDP number is a function of consumer spending. So now we're seeing it slow down. We're seeing it slow down, which again, on Friday at 11, we actually saw that drop. Again, I'll zoom in a little bit. Right, so the dollar index dropped from 110.80 all the way down onto Friday on release of the consumer sentiment news. It went from that 107 level down towards that 106, almost 106.30 level. Right, so we saw that big drop towards the downside. So that big downward move on the dollar index has had that implication across the board for all the other currency pairs. Later, I'll scroll through with you, but it actually shows that all the other pairs were gaining against the dollar because of that weakness. So like I was telling you, on Friday afternoon, 3 p.m. GMT +8, we had the GDP number for the UK. Okay, this is actually a really bad data here. It was a minus 0.3, got revised slightly towards minus 0.1, expected to be a minus 0.4. It got released at a minus 0.6. And you can see here, now we have consecutive months, right? Minus 0.3, now released at minus 0.6. We have a consecutive months of GDP negative data, right? So this gives the signal, right? This gives a signal that the UK recession coming, right? The UK recession is coming as the economy begins to contract. Technically, what we look for when we talk about recession is for a consecutive quarters of negative data in terms of GDP. Okay, so now we've seen two negative months. We're possibly going to see a negative quarter. And then if we see two negative quarters, we're going to see even more confirmation about the UK recession or UK economy being in a recession. But we didn't actually see the pound dollar drop significantly. Right, take that away again. Right, we didn't actually see the pound dollar drop significantly. You can see on Friday on release of that news at 3 o'clock, it tried to break a little bit lower before pushing back up again. Why did it push up? Really because of that weakness of the US dollar, right? The weakness of the US dollar has propped the pound dollar towards the upside, despite the GDP data signaling that the UK is entering into that recessionary phase. All right. So just do a quick overview here. What you can see is that on Thursday, we actually saw, because of that dollar weakness, we saw the yen drop from that 146 level now all the way down towards 138. Right now, testing that 140 level again. So the big downward drop from Thursday through to Friday. Right now, today with I'll show you actually. So I'm jumping around a little bit, but today, looking at the news, there's no major news events. What's likely to happen today and possibly into tomorrow is that we're going to see the prices consolidate a little bit, push a little bit towards the upside, or I would rather retrace against the dollar a little bit, before possibly continuing on with the trend. So nothing much here. We can see that on Tuesday, tomorrow, we do have the Aussie monetary policy meeting minutes to be released. We have the UK claimant count numbers, that's employment numbers or unemployment numbers. They're looking to go from a 25K to a 17.3. US Empire State Manufacturing, not a big news event. PPI, important, but not a big price mover typically. More importantly is on Wednesday, we do have the UK with their CPI data. All right. So bear in mind remember what you saw on Thursday last week with the US CPI data. It dropped quite significantly. And that's why we saw the dollar weaken, because they're talking about possible relief in terms of a rate increase. Right now, CPI data, or coming on Wednesday, CPI data for the UK, year on year, looking to go from a 10.1 to a 10.5%. So we're still looking, or market is still anticipating further interest rate further inflation growth for the UK. Right. So if they're anticipating further inflation growth for the UK, what this means is that we could be anticipating that the Bank of England could be looking at further rate increases. Right. But that's on Wednesday. From then to now, we still have to contend with what the dollar index is likely to do. From there, on Wednesday, again, more CPI data for the Canadians, where we do have the Canadian CPI year on year looking. You can see here just across the board, month on month, from a 0.1 to a 0.7, still looking to increase. Median CPI year on year, 4.7 to a 4.8. Again, a small growth, very small growth there. Trimmed and common as well, looking to increase a little bit, or trimmed looking to increase a little bit from a 5.2 to a 5.3. And then common CPI looking to drop slightly. What this means is that we could again on Wednesday see significant volatility, not just for the pound dollar with their CPI release, but later into the trading session on Wednesday, we could actually see the Canadian dollar see significant volatility with the CPI release as well. Moving on from that, we do have some retail sales number, could bring some strength back to the US dollar or the dollar index. But I think that we also might be setting up for a little bit of disappointment. So just be aware of that retail sales number release on Wednesday for the US. Then on Thursday, employment numbers for the Aussie. And then okay, it seemed like my Zoom crashed. Just want to check. Are we back? Hey Ferda, I just want to check are you still there? Zoom crashed for a while. I got a bit of a technical issue here. We just want to make sure that everyone is still on the stream. It was a little bit unexpected. Just check. Let me see. Just want to make sure that we have everything still streaming and it's all working fine. Okay, seems like it's still good. All right. So as I was saying that we're looking at possibly for this week, a lot more volatility on the pound dollar, on the CAD, and then a little bit onto the Aussie with the employment change or employment data to be released. Possibly going to be some bad news as unemployment rate looking to go from a 3.5 to a 3.6%. Okay. All right. So looking at the charts here, doing a bit of analysis and forecasting here, what could happen, right? So I'll do this on the H4 time frame. What could happen onto the dollar index? First off, is that we know for sure we have a good strong support level there at about 106.28, right? 106.28, that overnight low, right? If price or if the dollar index does continue trading lower, does break below this 106.28, where could it head towards? So as I zoom out, you can see that we have a very key low support here at 104.63. Okay, 104.63. So what we're looking for is if the dollar index does break below 106.26, it could trade quite strongly down towards 104.60, and you can actually see that move towards the downside. Okay. Alternatively, like I was just telling you earlier, is that today we might actually see some retracement, right? We might see some retracement on the dollar index because that big move towards the downside. Very likely, we're going to see some profit taking. We're going to see some retracement back up. We do have a very key level here at about this 107.60 level, but I think that's quite high, right? It's quite high for it to climb from that 106.85 towards 107.60. I do like the nice round numbers here at 107. So you can see that over the last 12 hours since the start of today, we actually climbed up towards the 107 trying to break, but it seems like it's failing to break above that. Right now, I haven't got any trades for today because right now I'm looking to see what's going to happen to the dollar index. Is it going to break above towards 107.60, or is it going to stay within this range before breaking down again, right? If it does break 106.28, it could come down towards 104.63. So what I'm looking for is price is likely to continue within this range, but because of the trend, we're looking at it possibly breaking towards the downside. Okay, so anticipating that dollar weakness maintaining or still being in play, what this means is that as we look into the US yen, all right, US yen very crucially, it's hit that 138.70 level and it's bounced, right? And if you looked at the price action, I'll move this a little bit lower to see. You can see that it actually formed a very small pin bar at that 108.73 or 70 level, and then it pushed towards the upside. Okay, it's pushing towards the upside. So what I'm looking for, right? Initially, when I was first planning this trade early this morning, I was considering whether the US yen could break below that 138.50 level, right? If it could break below 138.50, I was looking for it to come down towards a nice round number of 138. But that trade didn't trigger because you can see that it didn't trade lower. In fact, it bounced towards the upside. So right now, what I'm looking for is that given that price action there at about 141, I'm going to see whether the US yen could climb up towards 141, possibly as high as 142.30 or 132.40. Okay, so I'm anticipating this move to trade within this area, and then I'm still looking for a possible sell. All right, if the dollar does continue to weaken, then I'll look for it to, in the short term, push up, test that 141 level. If it can turn down from there, great. If not, a trade within this range before breaking lower again. So as an idea, what I'll be looking for is either to sell down from 141, below 141, about 140.70, about 140.70. Stop loss very tight at about that 50 pip range. Take profit about that 200 pip range. You're looking at a 1:4 risk reward ratio towards the downside there on the US yen. Okay, what you need to do, stay really patient. It is tracking higher. I wouldn't be looking to buy it up now. I was buying the yen up as it was trading up previously, but now given that big drop and that dollar weakness, I'm looking for it to trade up, wait for it, and then after that, look to sell it back down again, right? Back down towards that 138.50 level. What if price breaks 138.50? Right, so we have to zoom out, possibly go into a daily time frame. If it breaks below 138.50, you can see, I'll drag this right across. 138.50, about there. Okay, you can see that it's tested those levels there. If it does break below this point, I think that 131, while that's possible, but it's quite a far distance away, I think a more realistic target would be about 135. You can see that we had a slight swing high there. Okay, so I'll be looking at 135. If it does break below 138.50, I'll be a little bit more conservative and say below 138. Stop loss, again, this would be quite big, about 100 pips. Take profit about 200, almost 300. You're looking at a 1:2.5 risk reward ratio towards the downside there on the US yen. Okay, so we do have H4 trade and H1 trade idea, both towards the downside, but does require a little bit of a waiting time. All right. With that said about the US yen, what I'll do is I'll look at the Aussie and the Kiwi first. All right, so Aussie trending, you can see very clearly is trending higher. What I like is that it's hit that 0.67 level, right? A nice round number, good resistance level there. Hit that level, turn down once, twice, well, one time, two, three times, failed to break higher. Okay, it failed to break higher, but because it is still an upward candle, I'm not looking to sell down yet. Okay, what I'll be looking for is if price can head towards the upside, breaking above that 0.67 resistance level. If it can break above 0.67 quite strongly, then the next key big resistance level would be at that almost 0.69 level, right? At 0.69 price level. But you know that there is employment numbers to be released for the Aussie dollar. And it looks like inflation might, looks like unemployment might be climbing a little bit. I don't think it's going to shoot up towards that 0.69 level in a hurry. Also, because if we see the dollar weakness continue, I don't think it's going to be that significant. So that would be my take profit level, but I would have an interim level at about 0.68. You can see we have quite a few levels there. So what you can say is that, I'll zoom in a little bit, it's easier to see. I would be looking for a buying opportunity if it breaks above 0.67, so about 0.6720. Take profit all the way towards 0.69. Stop loss, stop loss relatively tight, about 30 pips. You're looking at very good trade towards the upside, 1:5. But if price comes up towards 0.68, you're looking at 1:2. You could be looking to close out half. So at about that point, you could be looking to, let me take that away. Right, so at about that point, you could be looking to get about half your trade based on that resistance level there. Okay, you could close out half and then have the other half running towards upside, or you could look to close out your trade as it climbs up. Okay, and then if it does break again, so you could be looking at a trade like that. And then if it breaks again, you could be looking for another trade towards upside. So you could break that into two trades towards the upside rather than one big one all the way up. Okay. On the flip side, you know, some questions might come in is that what about a counter trend trade idea? Could this reverse back down? It could happen only if we see significant strength on the dollar index. When are we likely to see significant strength on the dollar index? Given that we're not primed for a lot of news events from the US for this week, I think that any dollar strength is going to come from either weakness in the euro dollar or whether the FOMC members or Federal Reserve members are going to comment about interest rate increases, which could see the dollar strengthen back up. So we do have a key level here at about 0.6520, or if you're going to be a bit more precise, about 0.6550. Okay, that previous level here. So you could be looking for, if we do see any news about a downside move or reversal on the Aussie dollar. So below the current level of 0.660, stop loss about 50 pips, take profit about 100. You're looking at a 1:2 counter trend trade towards the downside. If it does come down strongly, then you could have the opportunity to move your stop loss to protect the profits and then drag your take profit down towards the next key support level at 0.64. That would be a nice big reversal on the Aussie dollar, but it needs the dollar index to recover in strength. All right, so far so good. Any questions? From that, what we actually have is a very similar picture here on the Kiwi dollar. All right, so Kiwi dollar, what I'll do here as well is to show you that we have been seeing that bit of that upward channel, right? This is a very wide one. I think a more narrow, precise channel would be like that. Okay, so we saw it test, move up, test that support level, came quite close, and now it's broken above that channel, right? So it was guiding that towards upside. It's broken above that channel now. So it could come down, or well, it came down, tested that support level, and looks like it's pushing back up again. Just bear in mind that the upside on the Kiwi dollar might be a little bit more limited than the Aussie dollar, right? You can see that we had a previous swing high from September at that 0.6160 level. Okay, so I'm thinking that we could see the Kiwi dollar push up from the channel, right? From breaking the channel, testing again, pushing up towards 0.6160. But I think that, you know, we could see a reversal on the Kiwi dollar as well. I did see a news there. Bank of New Zealand economists think that the Kiwi dollar would prefer to hike the OCR by just 50 pips rather than 70 pips as widely anticipated. Okay, so this might be one of the news. You can see that Reserve Bank of New Zealand would prefer to raise official cash rates by 50 rather than 75 basis points as widely expected in its next interest rate review on the 23rd of November. So think about it. We had, our markets has been expecting a 75 basis point increase. If they do raise rates by 50 basis points, that would come as a bit of a disappointment for the markets, and that's possibly where we could see that reversal back down, right? The weakening of the Kiwi dollar, a reversal back down. So the 23rd of November is next Wednesday. We could see price climb up, test that 0.6160 level before turning back down again. What I'm actually looking for, I'm not looking to buy the Kiwi up. I'm actually looking for points of reversal. So in this case, I would be staying out. I'll be looking for a price action to develop at that key level. And then if it does reject that 0.6160 level, about 0.6140, stop loss about 50 pips, take profit towards the downside about 200. You're looking at a 1:4 risk reward ratio towards the downside on the release of the news. If the RBNZ does increase rates by only 50 basis points. If it does turn back down, from here, then we could see the early reversal towards the downside. Okay, however, I think that with the current trend of the dollar index, I think that it's a bit unlikely we're going to see a strong reversal. We need a couple more stimulus to push price towards the downside. All right. So far, so good. Any questions? No questions? All good? All righty. So pound dollar right now approaching that 1.18. This is 1.1799 level. Let's consider it 1.18. You can see that after all the craziness on the pound dollar, that big drop from 1.12 down towards 1.03, the talk about parity, you know, whether the pound dollar can get to 1.00 is now no longer relevant because price is at a 1.18 level. right? So at 1.18, the discussion now is whether how high can the pound dollar go, right? We do have a very strong resistance at 1.19, and bear in mind, we do have the UK CPI data to be released, right? UK CPI data looking like inflation is going to stay high. So we could actually see the Bank of England talk about further rate increases, right? If they do talk about further rate increases with the GDP already in that negative territory, what we could actually see is more bad news for the UK. So I think that we could see price in the short term trade up, right? Maybe from trade between that 1.19 and 1.12 price level. Okay, I'll drag this right across. You can see that it could stay between 1.19 and 1.12 before a rejection towards the downside. Again, remember, every time I talk about rejection now, it's not just a technical recession or rejection. We do need to see strength in the US dollar to actually drive prices down. Okay, it's not going to work alone. As we saw last week, bad data from the UK, we still saw the pound pushing up because of that weakness in the dollar. So for this to push up with the dollar weakness, but for this to turn down and reject towards the downside, we will have to see some dollar strength come back into play. At about 1.19, just below that 1.19 level, you could be looking at about a 50 pip, 60 pip stop loss, a take profit back down towards the 1.13 level. Okay, where it all started there, you're looking at a big trade towards the downside. Okay, so that would be your key support level, a key take profit level, but you would have an interim hesitation level at about 1.16. Okay, so you could, again, price turns down, close out half the trade at 1.16, or ride it all the way down, just move your stop loss to secure, to break even, and then to secure some profits as well. With that, US CAD breaking a key support level, you can see that we had it there before it broke that 1.35 level very strongly. It came down to reach that previous swing low of in September at 1.3245. Currently ranging between 1.33 and 1.3245. I think that we're going to see that trade. The US CAD or movements on the US CAD has been very driven by the way the dollar index has been moving. Okay, very driven by the way the dollar index has been moving. So it's quite straightforward. You know, if you do see the dollar index continue trading lower, trending lower, then we could anticipate that price is going to break below 1.3245 towards the next support level, well, key support level at 1.29 or 1.30. If you did sell it down about 1.32 level, stop loss about 50 pips, take profit about 200, 1:4 towards the downside. Alternatively, if we see the dollar strengthen, right, then we could see this bounce off that 1.3245 level to trade higher. So in this case, I'll be a lot more careful just because of that recent downward move. So I'll be looking for it to break above 1.3320. Take profit about 160, 170. Stop loss quite wide because I want it below that support level about 90. So you're looking at a 1:1.7 risk reward ratio towards upside. This would be considered as a counter trend trade, right? This would be considered as a counter trend trade just because of that recent move It's been dropping since almost hitting 1.4, dropping all the way down, now finding that key support level. Between these two trades, I think the more likely scenario is that we're going to see price trade lower to break that support and then possibly trend down towards that 1.30 level. And also remember, we do have the CPI data to be released from the Canadian side, and we are looking, right? The data or the forecasted data is signaling that we could see potentially increasing or stickily high inflation data for the Canadians. Again, could signal further rate increases from the Bank of Canada. That's why we could see it push towards the upside. But I think that, it's still going to be quite heavily driven by the dollar index. So look at what happens to the dollar index before translating it across to the US CAD. All right. And then on the euro dollar, look at that. Oops, take that away. Euro dollar was all that talk about below parity. It fell, it went all the way down to 0.95, 0.9551 or 50 before rebounding strongly right now. Or since Friday, it tested that 1.035 level, and it's retracing, consolidating a little bit between that narrow price range of 1.03 and 1.0350. What could happen? Again, sounding like the same thing over and over again. But if the dollar does weaken, then I'll be looking for price to break above 1.035 to trade higher. How much higher can it go? You can see that the euro has been trading quite significantly lower. Let me just drag this right across. Okay. So about break above that point, break above that resistance level, then we could, I don't think it will go all the way towards 1.06 in a hurry. It could happen, but I don't think you'll get there. That would need the dollar index to drop significantly right across the board. I think an interim level would be at about 1.0480 or 1.05. Okay, so zoom back in again. What we could be seeing here is going to break above that near-term resistance level, trading higher, about 1.0380, take profit 90 pips towards that 1.0480 level. Stop loss very tight here at about that 40 pips. You're looking at a 1:2 risk reward ratio towards the upside there on the euro dollar. Make sense so far? All good? Okay, great. So now let's look at some indices as requested. Let me see, where is it? Okay, no. Here we go. Where are my indices? Okay, there we go. German 30. I do it on the daily time frame. I like how, we see it's always been dollar weakening. We see the markets and indices gaining right across the board. You can see that prices has been pushing towards the upside here with the DAX. So the next key level here is at that 14,741 level, right? I think based on the current trend, and you can see that in a very rough drawing, we do have that upward move. All right, pushing up, heading towards or coming close to that top of that channel. What we could see is it hit, turn back down a little bit before turning back up. So I'm looking for that move to continue. all right, back up towards that 14,741 level. An interim support level here at about that almost that 14,000 levels, 13,981. So I don't think it'll drop all the way, right? I think it'll drop halfway before testing back up again, right? Continuing with the trend towards that near-term resistance level. Okay. And then NASDAQ 100. Okay, at this point, again, on the daily time frame, you can see that good range, well, good support level, very close to that 10,600 level. Okay, and it's just broken out of a recent consolidation at the 11,600 level. Okay, what I think is likely to happen, I'll just show you, I'll zoom it out a little bit just to show you here, is that we've had that kind of channel towards the downside. Okay, you can see it test, reject, came very close, turned back down, tested again, rejected. Right now, climbing, breaking out of the wide consolidation, testing higher. What I think could happen here is that we're going to see it test this level, bounce around a little bit, maybe trade up, and then after that, come back down. Right, for this to come back down again, it would also depend on the X, Y. Okay, dollar strength. If we do see that dollar strength come back into play, it does have a somewhat of an inverse relationship with the index. So we could see this test around this point, break up a little bit before turning back down again, possibly towards that 10,600 level. Okay, can it go below this point? Quite possible. I mean, everything's possible, but I think that if I drag this right across, you can see that it's a very key support level. This was tested back in September 2020. I think that it's a bit unlikely we're going to see it break strongly below. So I think we're going to see it come down, test again before, if I drag this right down, right, it could come down, test, and then after that, break up towards upside again. Okay, not that significantly, but in the scheme of things that way. Okay, we can see that break up again. All good. Any questions? Any questions at all? All right, fantastic. So with that, one last one we'll look at is the Swiss franc. Right, we were preparing this before. Swiss franc again at a key level. Right, we saw it test in March 2022, rejected towards the downside, so it's a good swing level. Came and tested this same swing level again in August, went all the way back up, and then now testing that 0.94 support level, key support level again. So again, remember the US Swiss franc, very similar to the US CAD. It does trade very similarly, or is driven by the volatility of the dollar index. So if we do see further weakness in the dollar index, then we could see the US Swiss franc break lower. Okay, so if we look at it on H4 time frame, you can see that it tried to bounce, but now it looks like it's pushing back down again. Why is it pushing back down? Really because of that dollar index. You can see that pushing back down. So US Swiss franc, what it needs to do is, if price can come down and break below that 0.94 support level. Right, if it breaks below that 0.94 support level, then the next level would be at almost 0.92, right? At a 0.92 support level. So what you could be looking for is staying really patient, waiting for price to move. If it does break below that current support level, could be as it breaks that support level, you could go quite tight on your stop loss, about 50 pips, take profit about 150, a 1:3 risk reward ratio towards the downside. Okay, so what we've actually done today, we've gone through the news last week, what happened last week. We looked into what could happen this week with a couple of news to be focused on the pound dollar, the US CAD in particular. We do have some other news, but I think the main price drivers will be on the pound and the CAD. And of course, driven by what could happen on the dollar index. We went through analysis on the dollar, Aussie, Kiwi. I think that despite the potential for the upside, we could see some reversal on the Aussie dollar and the Kiwi dollar, possibly not immediately, but it could develop into a reversal pattern there. The pound dollar and the euro dollar looking at further upside, with the US CAD and US Swiss franc likely to trade very similarly in terms of volatility and directional bias, according to the dollar index. All right, the DAX and the NASDAQ 100 likely to continue with the current trend, especially with the way the dollar index is moving. But I think it looks like we could see some level of reversal, possibly a bit earlier on the indices rather than on the currencies. So just be extra aware of those particular events. With that said, any further questions? All right. If not, what I'll do is I'll call an end to the session. If you do have any further questions, please remember to tune into our next sessions, and we'll be happy to guide you through your trading journey. With that, trade well, trade safe, and I'll see you again. Take care now. Bye-bye.